It has become obvious that the Federal Reserve will lack in its monetary policy easing after the central banks of the eurozone, Switzerland and Canada took dovish decisions. The New Zealand regulator maintains its key rate at 5.5%. However, the economy of this island country could hardly be compared with that of the United States. That's why the US economy continues to dominate the forex market. In a case of extraordinary events, the greenback responds with the high volatility and then resumes rising. Early on Friday, the currency consolidated above the key support level of 105.5 points. This happened despite weak reports on the US labor market, industrial production and real estate. The data may force the Federal Reserve to cut the key rate twice this year instead of once, and this may have a completely different influence on the greenback. Let us learn what events will shape trader sentiment early next week, namely on June 24 and 25. You're watching Traders Calendar. Macroeconomic reports issued on a Monday and Tuesday may reflect market sentiment, though it seems far from economics, and this term is crucial for those who produce and provide services as well as for those who buy them. Higher and more active interaction between these sides is good for the country. For example, Germany's business climate index was revised down to 89.3 points in April. However, May's figure is expected to be more optimistic and hit 93 points. If the prediction come true, the euro might climb against the US dollar. On Monday, the US will disclose its Texas Manufacturing Business Activity Index. Although the indicator reflects the situation only in Texas manufacturing sector, it may have a considerable influence on the US dollar. Analysts foresee a reading of minus 13 points, which could shake major pairs and support the greenback. Tuesday kicks off with a report on the consumer sentiment in Australia. Its previous and expected levels are still in the negative zone at minus 3% and minus 1% respectively. While consumer expectations have improved slightly in the past months, high inflation cannot allow quick positive changes. That's why the index is likely to stay below zero. Against this backdrop, the Australian dollar may show a short-lived reaction. Later that day, a similar index will be published in the United States. In April, the Consumer Confidence Index was at 102 points. Analysts suppose that in May, it will drop to 99 points. Significant deviations could affect the markets. A jump in the index may cause either a rise or a decline in the US dollar. If it hits 93 points, traders are likely to sell off the greenback in favor of the stocks. Also on Tuesday, the US will release data on the house price index. Last month, it hit a peak of 7.4% for the first time since October 2022. This index tracks 20 US cities and has been recording price increases for 9 months in a row. If the forecast of a 6.8% comes true, May will be the first month of falling inflation in this segment. Lower prices usually push the dollar down, which could launch a whole new story for it. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.